Thinking of exiting your business or taking on a private equity partner to help you grow faster? BizNexus has you covered. Tap into our network of thousands of best-fit investors, acquirers, and proven M&A advisors, and we'll help you begin the relationship confidentially on your terms, your timeline. Learn more at biznexus.com.
Disclaimer from the always present legal team. Podcast conversations don't necessarily reflect the views of BizNexus Incorporated. Everything you hear is informational news and updates from around the industry. We're not recommending any investments. We're not offering any investment advice. Be sure to do your own homework.
All right, welcome back. Today, we're going to kind of go on a deep dive into a world that often gets overshadowed by those like huge, flashy billion-dollar deals.
Great.
The middle market.
Yeah.
So, we're talking those businesses valued between, what, $2 and $50 million?
Exactly.
Sometimes called the lower middle market. Now, you've sent over some fascinating research on this, on how private equity firms are finding and securing deals in this space.
Mm-hmm.
And honestly, some of it really surprised me.
Yeah, it's a really dynamic landscape, that's for sure. While the middle market might not grab headlines the same way that those mega deals do, the sheer volume of activity is kind of staggering. This report highlights nearly 2,000 middle market private equity deals closed in 2023 alone.
Wow.
So compared to a few hundred in the upper market, that's a massive pool of opportunity.
Okay, so 2,000 deals. That really kind of drives home the point that there's a lot of action happening under the radar.
Yeah.
But finding those hidden gems, especially when many middle market companies are private, can't be easy.
Exactly. The information isn't always readily available, which makes strategic sourcing all the more crucial.
Right.
And that's what we're going to unpack today, how PE firms are approaching deal sourcing in this really unique market.
I'm ready to unpack. One of the things that jumped out at me in the report was this emphasis on technology.
Oh, for sure.
It seems like even traditional strategies, like networking, are getting a digital makeover these days.
You're absolutely right. It's not enough to just kind of show up at industry conferences anymore.
Right.
Savvy firms are using all these online platforms to research attendees beforehand, identifying key individuals that they want to connect with. They're scheduling meetings, in advance to try and maximize their time and really make those interactions count.
So it's almost like, pre-qualifying your networking.
Yeah.
Which makes a lot of sense, especially if you're trying to be efficient with your time. I remember reading about a PE firm that used LinkedIn's Sales Navigator tool to map out the attendees of a major manufacturing conference.
Oh, interesting.
And they identified something like 30 potential targets, pre-scheduled meetings, and ended up closing 2 deals from that single event.
Wow, that's a great example of how technology can amplify traditional methods.
Yeah.
I mean, it's not about replacing the human element entirely. It's about leveraging data and insights to make those in-person interactions more targeted and impactful.
Oh, okay, so even classic strategies are getting this modern twist. But the report also highlighted a shift towards more proactive deal sourcing.
Yes.
Particularly with something called proprietary deals. And I have to admit, I hadn't really encountered that term before.
Yeah, so proprietary deals are essentially off-market deals, so they're not actively being shopped around.
Oh, okay.
These are situations where a PE firm identifies a company that fits their investment thesis and then reaches out directly, often before the company has even considered selling.
Oh, so imagine finding that perfect company before it even hits everyone's radar. Less competition, potentially better terms. That sounds incredibly appealing. But how do you even begin to uncover those hidden gems?
It requires a really deep understanding of your target market, having a very clearly defined investment thesis, and then a willingness to be proactive.
Yeah.
Firms are using a combination of data analytics, industry expertise, and really creative outreach strategies to identify those potential targets. Think about it as kind of a combination of detective work and relationship building.
So you're not just waiting for deals to land in your lap. You're actively seeking them out. It's like a treasure hunt, but for businesses.
That's a great analogy.
Right.
And it's, becoming increasingly important as competition intensifies, especially in that middle market space.
Well-
Take the case of a PE firm that specializes in the software as a service space. They used a combination of industry reports, online databases, and even, customer reviews to identify these promising companies that weren't actively seeking investment.
Wow.
And then crafted personalized outreach strategies, highlighting, how their expertise and resources could help these companies scale and achieve their growth objectives.
That's fascinating. It sounds like they're almost acting as consultants, offering value even before a deal is on the table.
Exactly. It's about building trust and demonstrating your value proposition. This approach can be particularly effective with, founder-led businesses in the lower middle market. These entrepreneurs are often passionate about their companies and maybe hesitant to, just sell to anyone. They want a partner who really understands their vision and can help them take their business to the next level.
That makes a lot of sense. So it's not just about the numbers. It's about finding the right fit, both strategically and culturally.
You've hit the nail on the head. And that's where a really well-defined investment thesis becomes even more critical.
Okay. Let's dig into that a bit. You mentioned it earlier, but why is a clear investment thesis so crucial in this world of proactive deal sourcing?
Right. It all comes down to focus. A strong investment thesis acts as like a filter, guiding your sourcing efforts and ensuring you're not wasting time on opportunities that just don't align with your goals.
Right.
It's like a roadmap.
Yeah.
Without it, you're kind of driving aimlessly, hoping to just stumble upon a great deal purely by chance.
So even if you're not running, a multi-million-dollar private equity firm, having a clear investment thesis is still really essential.
Oh, absolutely.
What are some of the key components that make for like a really robust thesis?
Sure. So first, you need to define your target company demographics.
Okay.
What industry are you focused on? What size companies are you looking for? Are you targeting specific geographic regions? The more specific you can be, the better.
So instead of just saying like, oh, I'm interested in tech companies, you might narrow it down to SaaS companies in the healthcare space generating, between $5 and $15 million in annual revenue or something.
Precisely. And then don't forget about the financials.
Right.
What are your revenue and profitability requirements? Are you looking for companies with a certain growth trajectory? Maybe you have specific debt or equity ratios in mind.
Right, so it's about understanding your financial appetite and ensuring that the companies you're targeting meet those criteria.
Exactly. But it's not just about crunching numbers.
Right.
Qualitative factors are equally important.
Okay.
What kind of management team are you looking for? What's their experience and track record? How strong is the company's market position? What's the competitive landscape like?
So it's really about painting this complete picture of your ideal target company.
Absolutely. And this brings us to another trend that was highlighted in the report.
Okay.
The rise of add-on acquisitions.
Now, we briefly touched on add-on acquisitions a little bit earlier.
Yeah.
But I'm curious to explore them further.
Sure.
How do they fit into this picture of strategic sourcing?
So add-on acquisitions involve acquiring companies that complement or enhance the capabilities of your existing portfolio companies.
Okay.
It's a way for PE firms to create synergy and drive value within their portfolio.
So instead of just like buying a bunch of separate companies,
Yeah.
you're strategically building these interconnected businesses that can leverage each other's strengths.
Precisely. And this strategy has become increasingly popular, especially in the lower middle market.
Mm-hmm.
There are a few reasons for this.
Right.
First, it allows PE firms to leverage their existing portfolio companies' resources and expertise,
Okay.
potentially accelerating growth for both the acquirer and the acquired company.
That makes sense. You're essentially tapping into this like existing infrastructure and relationships to create a more powerful single entity.
Exactly. Second, add-on acquisitions can be a way to mitigate risk.
Yeah.
By acquiring a company that's already operating in a familiar market, you're reducing some of the uncertainties associated with entering a new space.
So it's a bit like sticking to your knitting, but with a strategic twist.
I like that. And third, add-on acquisitions can be a way to access lower multiples.
Okay.
In a competitive market where valuations can be high, finding attractive deals can be challenging.
Right.
But by acquiring a smaller company that complements an existing portfolio company,
Yeah.
you might be able to negotiate a more favorable price.
That's a great point. It's about finding creative ways to deploy capital and generate returns in like a challenging market.
You're exactly right. And this leads us to another interesting insight from the report.
Okay.
It's not just about who you're buying,
Yeah.
but also about who you're partnering with.
Okay, this is where the report really surprised me.
Yeah.
It highlighted some pretty unexpected collaborations happening in the deal sourcing space.
Right. Beyond the traditional partnerships with investment bankers,
Hmm.
we're seeing PE firms collaborate with family offices, venture capital firms, and even other PE groups.
Now, I wouldn't have immediately thought of family offices as like a source of deals.
Right.
What's the appeal there?
Well, family offices often have a longer investment horizon than traditional PE firms.
Okay.
They're not necessarily looking for a quick flip.
Right.
They're seeking stable long-term growth.
Yeah.
And this aligns really well with the goals of a lot of middle market businesses, especially those that are family-owned and operated.
So it's a potential win-win. The family office gets a solid investment, and then the PE firm gains access to a deal they might not have found otherwise.
Exactly. And there's also the potential for co-investment alongside the PE firm,
Okay.
which can be attractive for both parties.
What about venture capital firms? Why are they becoming such a valuable source of deals for PE firms that are focused on the middle market?
Well, venture capitalists invest in early-stage companies,
Yeah.
many of which have the potential to become those middle market players down the line. By building relationships with VC firms, PE firms can essentially tap into a pipeline of these promising companies as they mature.
So it's like getting a sneak peek at the companies that might be ripe for acquisition, in a few years.
Exactly. And this can be particularly valuable in fast-growing sectors where new technologies and business models are constantly emerging.
Now, the idea of partnering with other PE groups seems a bit counterintuitive. Aren't they
Yeah.
your competitors?
They can be, but they can also be valuable collaborators.
Okay.
PE firms are increasingly specializing,
Mhm.
focusing on specific industries or niches.
Right.
So if a firm comes across a deal that doesn't quite fit their investment thesis, they might pass it along to another PE group that specializes in that area.
So it's about leveraging each other's expertise to find that perfect fit for a particular opportunity. It's like a network of matchmakers, but for business deals.
That's a great way to put it. And it highlights the importance of building relationships and developing a reputation for being a reliable partner.
This deep dive has been incredibly eye-opening.
Hmm.
I feel like I have a much better understanding of the complexities and the opportunities, in the middle market.
I'm glad to hear that. It's a fascinating space and it's constantly evolving.
As we wrap up, what are some actionable insights our listener can take away and apply to their own ventures, whether they're, a seasoned investor or just starting out?
Well, I think one of the key takeaways here is to really embrace that idea of being proactive. Don't just kind of wait for deals to come to you, right? You really got to actively seek out those opportunities that align with your investment thesis. Use that combination of data, research, networking, all that to identify potential targets.
Yeah.
And don't be afraid to think outside the box.
That's a great point. It's about really taking ownership of your, deal sourcing process.
Yeah.
I also think, the report really highlighted the importance of building those strong relationships. Whether it's with those investment bankers, family offices, or even other PE firms, those connections can really open doors to deals that, you might not have found otherwise.
Absolutely. And remember, relationships are built on trust.
Right.
And that mutual benefit.
Yeah.
So be a valuable partner, share your expertise, offer insights, and be willing to collaborate.
Right.
That's how you create a network of people who are truly invested in your success.
Now, even if you're not running a PE firm, the concept of a well-defined investment thesis, that still applies. So I really encourage our listeners to really think about what their investment criteria are, what kind of opportunities they're looking for, and what their non-negotiables are.
That's such an important point. Having that clarity, it's going to help you focus your efforts, right? And avoid wasting time on deals that just aren't a good fit. And as we discussed earlier, that strong investment thesis, it also makes it easier to communicate your value proposition to, potential partners and investors.
This deep dive has been incredibly valuable. We've covered a lot of ground, from that evolving landscape of the middle market to the strategic sourcing techniques that are really driving success in the space.
It's been a pleasure diving deep with you. I always enjoy exploring these topics and sharing these insights that can help our listeners make more informed decisions.
And as always, we encourage you to keep diving deep, explore new ideas, and challenge yourself to, think differently about the world of business and investment.
Right.
Until next time.
Acquiring a business? BizNexus simplifies it. Access thousands of updated opportunities in our DIY marketplace or supercharge team sourcing with OmniSource, your all-in-one platform for on-market, off-market, and coming-soon deals. Scale smarter today. Learn more or book a demo at www.biznexus.com.